Tenemos con nosotros a Elizabeth Geoghegan, Fixed Income Portfolio Manager de Mediolanum Internacional de MIFL. Elizabeth, good morning.
Good morning. Thank you for having me.
Thank you for having us this time for you. What is expected in terms of monetary policy in this year, in this 2022?
So what's expected from central banks on monetary policy this year is tightening. This year started off with a spurt of volatility when we had the release of the Fed FOMC meeting minutes, which came out as more hawkish than expected, which prompted quite a sell-off in rate markets, with rate markets now expecting around 4 rate hikes from the Fed this year. But what was more surprising was the comments that we had around the shrinkage of the balance sheet. Historically, the Fed have waited between 18 and 24 months to start quantitative tightening after their first rate hike. However, now markets are pricing in for quantitative tightening to start as soon as June or July this year. So this really shows a commitment from the Fed to significantly tighten financial conditions this year. Looking closer to home at the ECB, we also had a hawkish tilt from the ECB in December when they announced that they would be ending their net PEP purchases in March of this year. However, in terms of rate hikes, this is where the ECB differs quite significantly from the BOE and the Fed, in that the first rate hike isn't expected until at least 2023, if not 2024. And this is mainly down to the difference that we're seeing in inflation in both the regions.
You mentioned inflation. This is the topic, the most important topic in this beginning of the year. What is your outlook in Mediolanum for inflation in 2022? Because we are seeing different points between Europe and United States. Could you see a difference in the final part of the year?
Yeah, absolutely. So last year, the source of debate was whether or not inflation was transitory or temporary. But what actually proved to be true was that inflation was a lot more persistent than expected. And a great example of this is the latest release of US headline inflation, which came in at a 39-year high. And all this really proved is that supply chain blockages have persistently caused elevated pricing. So we prefer to look at core inflation to get the best picture. Core inflation in the US in the summer of last year started to slow, and Fed members use this as justification to remain accommodative. However, since then, we've seen a pickup in core inflation in the US, and this has really formed the basis for the outlook for Fed hikes this year. In Europe, the picture is a lot more subdued, and this is mainly due to the fact that we have a lot more labour market slack in Europe, and with the outlook for core inflation a lot lower than what we see in the US. So core inflation is expected to come in well below 2% at the end of this year, which is why the ECB is waiting to hike rates a lot further out than the likes of the BOE or the Fed.
Look at the inflation difference between United States and Europe. And if we are focusing in a GDP difference also in Europe and United States, what's your point of view about that?
Yeah, of course. So the US and Europe, we expect positive growth for both regions this year. But if we want to look at specific differences, we expect European growth to outperform US growth for 2022. And the reasons for this is twofold. Firstly, we have had a lot of savings by European consumers throughout the pandemic. So their savings rate increased above the pre-pandemic averages. This year, we expect this savings rate to fall back to pre-pandemic norms. And so this should free up a lot of capital to be spent elsewhere, specifically in services, which would really help to spur more growth. But the bigger factor that's driving a difference in growth between the US and Europe is what we're seeing on the fiscal side of things. So the US were fortunate in that they were able to respond almost immediately to the pandemic and deploy fiscal stimulus. However, in Europe, we're only seeing fiscal stimulus really come to the fore this year. So we've had additional fiscal spending from the new government that we're seeing in Germany. There's been some fiscal spending ahead of the French elections in France. And then what's gaining the most attention is what we're seeing on the recovery fund and how that will benefit the likes of Italy and Spain in their recovery this year. So all in all, for the year, we're expecting European growth to come in just above 4% for 2022, whereas for the US, we're expecting growth to come in below 4% for 2022.
Looking some running election in different parts of the world, Brazil and France, what should we expect for 2022 in terms of politics?
Yeah, absolutely. So there's actually two presidential elections in the first half of this year in Europe. The first is in Italy and the second is in France, as you mentioned. So the Italian elections will take place at the end of this month. And these are particularly interesting because the leading candidate is actually the current Prime Minister, Mario Draghi. And this presents a risk for Italy because 2022 is a crucial year for Italy being able to implement the reforms needed to secure funds from the recovery fund. And so if Draghi were to step down as Prime Minister, if he were to win the presidential elections, this would mean that there's a risk that Italy may not be able to secure the funds needed for its economic recovery. Now, risk assets have started to price this risk in with the spread of Italian bonds, BTPs, over bonds at over 130 basis points. And when we think about spread widening, another great example of elections that weighed on risk sentiment were the French political elections in 2017, when there was a risk that France may leave the EU. Now, we don't expect the French presidential elections this year to represent the same kind of risk-off event. In particular, Macron is trending very popularly in polls with an approval rating of around 40% in recent days. And although we're quite a way away from June or July when we'll have the final result of the French presidential elections, this is a very favourable position for a president to be in at this point in the race.
Thank you very much, Elizabeth Geoghegan, Fixed Income Portfolio Manager de Mediolanum. Thank you for having this time with us.
No worries. Thank you very much for your time and look forward to speaking again.